Have you ever wondered how to start investing in ETFs with ease? Hey there, welcome back to the channel. Today we're diving into the world of ETFs and how you can easily start investing in them. ETFs, or exchange-traded funds, are a popular choice for beginner investors for a good reason. They offer diversification, low fees, and ease of trading. But let's address the elephant in the room: the common barriers beginners face when trying to invest in ETFs. It could be the lack of knowledge or the fear of complexity surrounding investing. Exchange-traded funds, ETFs, have gained popularity as a versatile and accessible investment option for beginners. They offer diversification, low costs, and ease of trading. This guide will take you through the essential steps to start investing in ETFs and help you understand the key aspects of this investment vehicle. 1. Understanding ETFs. 1.1 What is an ETF? Definition: an ETF is a type of investment fund that holds a collection of assets such as stocks, bonds, or commodities. ETFs are traded on stock exchanges, similar to individual stocks. Structure: ETFs are designed to track the performance of a specific index, sector, commodity, or asset class. 1.2 Benefits of investing in ETFs. Diversification: ETFs provide exposure to a broad range of assets, reducing the risk associated with individual investments. Lower costs: ETFs typically have lower expense ratios compared to mutual funds. Liquidity: ETFs can be bought and sold on stock exchanges throughout the trading day. Transparency: ETFs disclose their holdings regularly, allowing investors to see what assets they own. 2. Setting investment goals. 2.1 Determine your financial goals. Short-term goals: saving for a specific purpose within the next few years, such as a vacation or a car. Long-term goals: building wealth for retirement, buying a home, or funding education. 2.2 Assess your risk tolerance. Conservative: prefer minimal risk and stable returns. Moderate: willing to take on some risk for the potential of higher returns. Aggressive: comfortable with high risk for the chance of significant returns. 3. Choosing the right ETFs. 3.1 Types of ETFs. Equity ETFs track a specific stock index, e.g. S&P 500. Bond ETFs focus on fixed income securities like government or corporate bonds. Commodity ETFs invest in physical commodities such as gold or oil. Sector and industry ETFs target specific sectors like technology or healthcare. International ETFs provide exposure to global markets outside your home country. 3.2 Research and compare ETFs. Performance: review historical performance and compare it to the benchmark index. Expense ratio: check the annual fees charged by the ETF. Lower expense ratios are generally better. Holdings: analyze the ETF's portfolio to understand what assets you are investing in. Liquidity: ensure the ETF has sufficient trading volume for easy buying and selling. 4. Opening a brokerage account. 4.1 Choosing a broker. Full-service brokers offer a wide range of services, including financial advice, but typically charge higher fees. Discount brokers provide low-cost trading with fewer additional services suitable for self-directed investors. Robo-advisors use algorithms to manage your portfolio based on your risk tolerance and goals. 4.2 Setting up the account. Application process: complete the online application, providing personal information and funding the account. Account types: choose between different account types such as individual, joint, or retirement accounts, e.g. IRA. 5. Building your ETF portfolio. 5.1 Asset allocation. Diversification: spread your investments across different asset classes to reduce risk. Risk tolerance: adjust the proportion of stocks, bonds, and other assets based on your risk tolerance and goals. 5.2 Selecting ETFs for your portfolio. Core holdings: choose broad-based ETFs that provide exposure to large segments of the market. Satellite holdings: add specialized ETFs to target specific sectors or strategies. 5.3 Rebalancing your portfolio. Periodic review: regularly review your portfolio to ensure it aligns with your investment goals. Rebalance: adjust your holdings periodically to maintain your desired asset allocation. 6. Executing your first ETF trade. 6.1 Placing a trade. Market orders: buy or sell an ETF at the current market price. Limit orders: set a specific price at which you are willing to buy or sell the ETF. Stop orders: trigger a buy or sell order when the ETF reaches a specific price. 6.2 Monitoring your investment performance. Tracking: keep track of your ETF's performance and compare it to the benchmark. Market news. Stay informed about market trends and news that may impact your investments. 7. Understanding ETF taxation. 7.1 Tax efficiency capital gains. ETFs are generally more tax efficient than mutual funds due to their structure. Dividends. Understand how dividends are taxed and consider ETFs that offer qualified dividends for lower tax rates. 7.2 Tax-advantaged accounts, retirement accounts. Consider holding ETFs in tax-advantaged accounts like IRAs to defer taxes on capital gains and dividends. Tax loss harvesting. Use losses in ETFs to offset gains and reduce your overall tax liability. 8. Avoiding common pitfalls. 8.1 Overtrading. Avoid frequent trading. Excessive trading can lead to higher costs and reduced returns. Stick to your investment plan. 8.2 Chasing performance. Long-term focus. Don't chase the latest hot ETF. Focus on long-term goals and consistent investing. 8.3 Lack of research due diligence. Conduct thorough research before investing in any ETF. Understand what you're buying and why. In conclusion, investing in ETFs is a smart and accessible way for beginners to enter the world of investing. By understanding the basics, setting clear goals, choosing the right ETFs, and following a disciplined investment approach, you can build a diversified and resilient portfolio. Stay informed, be patient, and focus on your long-term financial objectives. With these steps, you're well on your way to mastering ETF investing and securing your financial future. Before we go, if you find this video valuable, don't forget to hit the like button and share it with your friends. Subscribe to the channel for more wealth-building tips and tricks. Also, check out any of these 2 videos on financial independence and wealth creation, and watch one of them to stay on top of your game. Thanks for watching, and see you in the next one.